Hello, good afternoon. Welcome to the marketplace. Coming up this afternoon, Ghana's total debt rises slightly to 769.4 billion cedis as debt to GDP ratio falls to 55%, meeting IMF target. Also coming up, Bank of Ghana officially puts cedi's appreciation against the US dollar 24.1%. Plus, the Monetary Policy Committee of the Bank of Ghana to announce a new policy rate today after meeting to review the economy. My name is Darryl Kwao. Thanks for being with us. Details coming up. Well, first up, Ghana's total debt stock rose slightly to 769.4 billion cedis as of April, reflecting a marginal increase from the level recorded in December 2024. This uptick is likely attributable to the cedi's performance in the first quarter of the year, as well as increased borrowing through the Treasury Bills market. Despite the rise in nominal debt, the country's debt-to-GDP ratio saw a significant decline, falling to 55% in April from its December 2024 level. This suggests that Ghana may have already met key International Monetary Fund target for debt sustainability well ahead of the program scheduled completion in May 2026. Well, joining us on Zoom is Associate Professor of Finance at the Andrews University with reaction to this, Professor Williams' report. Thank you so much for your time. We're looking at these latest figures and wondering if it's a sign of economic improvement. Your thoughts?
Good afternoon to you, Darryl, and good afternoon to your viewers. As we have been able to achieve the 55% debt to GDP, it's just a sign of confidence in the IMF program ongoing. Though we must be very cautious because we are not yet out of the woods yet. The government has not just started implementing most of its programs and also moving into full-time expenditure items in infrastructure. So we may have to wait and see the impact. But if you ask me, because of the government intentional policy to limit expenditure, let me put it, they normally use the word expenditure efficiency. That is why we are seeing this major impact. One other element we must admit is that in the nominal terms, you've seen the GDP has grown. So when the GDP, you've seen it being moving up, it may also have an impact on the debt to GDP. So it's just a mixed bag. We may have to find that kind of balance. And also, when you see the exchange rate situation, currency appreciating, it reduces the debt exposure in terms of foreign currency. So these are some of the issues that come at play now.
All right. So your verdict, we are not out of the woods yet. But what are the long-term implications of the current debt levels on economic growth?
So if we are okay, so anytime we borrow and the debts we are using it for productivity, it has a positive impact on growth. However, if we are borrowing and using it for consumption, it will have a negative impact. So that is what we saw in the past. So I'm just advising the current government, whatever we are going to take money from in terms of loans, we must put them in the productive sectors. When our debt levels are moving up, it may have an impact on some other projects, infrastructural projects, education and health may, because instead of using the money to pay for to do these activities, we'll be using it to service loan repayment, interest and principal payment, and then become the country will start to suffer. This is what we experienced in the past. So I know the lessons have been learned, and the government will have to strategize well in terms of their use of funds.
Yeah, and we are told that this uptick is also attributable to government's increased borrowing on the Treasury market. How effective are Treasury bills as a short-term financing tool in this current economic climate?
I mean, we all know that we have been kicked out of the long-term markets in the bonds, local bonds, and also the euro bonds outside. We know the situation. So the only option left for government is to use the short-term securities to be able to meet operational needs. What I may advise is that the government should not use the Treasury bill, which is short-term in nature, to go and finance long-term operations. Then it becomes a mismatch. Um, Treasury bills inflows are just quick funds to support government day-to-day operations. So that should be the focus. The only worry is that the government may have to strategize that if they want to come onto the bonds market, especially the local bond market, they may have to educate investors so that they will have confidence in it that now if you buy the local bonds, you are not going to get any haircut in the future.
So as it stands right now, debt to GDP ratio at 55%, we are meeting the IMF's target, but we have to look at debt sustainability in the long term. Even after the IMF program, what strategies should the government adopt?
I mean, so if you ask me, I'm just going to mention five main strategies I'm sure the government is aware. One, revenues generation. They must have to broaden the revenue generation. The taxation must have to broaden it. The second aspect is efficiency in expenditure rationalization, which means that government may have to make sure that whatever expenditure line item they are putting the money in is going to be productive. Two, the third one is on the state-owned enterprises. We've noticed that they have become a major problem to the country. We know the issue of Electricity Company of Ghana and other state-owned enterprises are not really performing well. So they must make sure that these state-owned enterprises are working well. If not, their problems will also extend to the government's own problem. Export is an area we must encourage to bring in the inflows that we need. I know the existing plans of the government, if it's being implemented well, we should see a lot of inflows coming in. And lastly, the government should not use short-term instrument like the Treasury bill money they are generating to pay for long-term infrastructure projects. That becomes a mismatch. And so that is what I would advise that the government should focus on so that we will not go back into the situation we found ourselves in some years past, just the IMF program.
All right, let's talk about the city. I mean, just as we're coming on the air, I mean, there are people who are watching how the currency is performing. They're talking about 10 cities and a few pesos to the dollar. We'll keep watching, but we are told in the first 5 months of the year, according to data released by the Bank of Ghana, the city strengthened against the dollar by 24.1%. That is an improvement if you compare to the previous year. As of May 2024, it was at 15.9%. These are new figures that we are receiving from the Bank of Ghana. I mean, there's been plenty of talk about the city's appreciation. What do you make about these latest figures?
So let me explain it very simple for everyone to understand. Exchange rate is the value of your currency. So when investors perceive or have a market expectation that there are positive signals in your country, your currency will appreciate. So that is what is happening. There are some signals that is happening that the government has given out, and that is turning investors' expectation into a positive limelight. And that is the reason why we're seeing that our currency is appreciating, which means that more people are seeing value in the city than in the past. So some of these we know what is happening to our cocoa inflows. We notice that the first quarter cocoa inflow has increased significantly. Gold inflows has increased significantly. Remittances increased significantly. So these are positive signals. We have also seen that the IMF program, as you just mentioned, there were two main targets: one, debt restructuring, and two, on the debt to GDP to 55%, which has been achieved. So these are some of the positive signals. The monetary policy mechanism being used is also working well to curtail inflation. We've also noticed, I think you are aware that the PPI has dropped to 18%, which is going to have a major impact on the net inflation rate coming up in June. So these are some of the positive signals, and because of that, the city is gaining value. So I will just say it simply: investors are seeing some positive signals on government policies and programs, and that is why the city is gaining value.
All right, we are waiting for a big announcement this afternoon on the policy rate. Depending on who you speak to, they say they think it will be a prudent thing for the MPC to hold the policy rate at 28% currently. What say you?
I mean, I agree with them perfectly. I'm just going to make two statements. One, we've noticed that a rate cut may influence inflation and weaken the city. So this is the major logic that we expect them to maintain it at the 28%. And two, there's no any immediate inflationary pressures justifying an increase or a cut. So these are the two major elements that if I sit as a member of the board, I'll just say, whatever policy they have put in place is working. Inflation is dropping, so there's no need to cut it now. Just have a wait and see attitude. Also, we have not seen when we will see the cedi being stabilized against the major currencies. So we need not to rush to have a cut. We need to see that the current system, the current rate of 28, bring us to a point that we see at this level, there's no volatility or a major decline or a high appreciation in the cedi. So that is what my guess would say. Let's maintain it at the 28% and just have a wait and see attitude what will happen in the next 3 months.
We'll wait and see. Thank you so much, Professor Williams, Associate Professor of Finance at the Andrews University. Thank you so much. I appreciate it. Well, Ghana's total earnings from exports hit record levels and in April this year. The Bank of Ghana data puts the figure at $9.3 billion. George Afe has more.
The summary of economic and financial data released by the Bank of Ghana showed that the amount realized represents a huge jump from the $5.3 billion gotten in April 2024. Gold was the major driver of this record growth for the first 4 months of this year, bringing in more than half of what the country secured. This development is said to be driving the record appreciation against the US dollar. It has resulted in Ghana's international reserves reach $10.6 billion ending April this year, compared to $6.5 billion in April last year. It actually represents 4.7 months of import cover. Ghana, on the other hand, spent $5.1 billion on its imports for the first 4 months of this year, resulting in a trade surplus of $4.1 billion.
And you're watching The Marketplace. Quick break. We'll be right back. All right, welcome back. Time for show business. Earlier this week, JP Morgan sent ripples through the entertainment and tech world by downgrading Netflix from overweight to neutral. This comes at a time when AI innovation is shaking up the very way we create films. So what does all this mean for content powerhouses, and how can developing economies, especially here in Africa, capitalize on this new era? Joining me in studio with insights, we missed him last week, he's here, country journalist and creative economy analyst. I didn't see this one coming. Kenneth Awojidako. Wow, I like the sound of that. Kenneth Awojidako, creative economy journalist. All right, let's begin the conversation.
Thank you for the welcome.
My welcome you back to the show.
Thank you.
So this is some real creative stuff. Tell us about it.
So this week has seen a lot of trailblazing activity in the tech and entertainment space. One of them has to do with the recent launch of Google's new AI video generating tool, which has taken the the social media space by storm. As we speak, people are still developing and finding other ways of testing out and seeing how best it can fit real life solutions. So let's just take a look at what transpired at Google's conference.
I'm questioning, searching, and then something shifts, and I'm not trying anymore, I'm just doing. And all of the pieces start falling into place.
It all feels pretty clear in my head. I see these flashes of possibilities, almost like I'm traveling through dimensions.
I'm looking down at myself and my characters in these different worlds, and it's almost coming to life on their own, even though I know I'm in control of that narrative. It feels like it's almost building upon itself at some point. You could have an infinite amount.
Well, this is mind-blowing, at the same time scary. So ChatGPT, the way we ask them to do stuff for us, is the same way you can do this?
Exactly. It's the same way that Google's Flow, which is its new video generating platform, which is being was outdoor 2 days ago, is that same principle. You just prompt the kind of video that you want, and it gives you exactly what you need. And then what makes it unique is that it's very nuanced when it comes to the texture, the color grading, and it's almost impossible to differentiate between what this is and what the real life instance of something that was created by an actual filmmaker is. It's very difficult to differentiate.
This definitely is a threat to traditional ways of telling stories, right?
Indeed it is, because it sort of lowers the barrier of entry when it comes to the filmmaking and the creative process. So it will take someone very long to study and find very skillful ways to do their craft, like a filmmaker or a film producer, to do this. But then a very average Joe can just wake up, go onto the platform, and also prompt, if prompted well, or if the prompt engineering goes well, they're able to get similar results, which are even sometimes come out better than what a filmmaker has studied and has come out with. So that is what is being of concern right now when it comes to the filmmaking space and entertainment space in general.
Okay, so relate this to Netflix getting a downgrade. What sort of shift are we seeing in this space?
I mean, right before that video or that Google conference happened where this groundbreaking technology was shown, there was news that JP Morgan had downgraded Netflix, I should say, from a high, its initial status as overweight down to neutral, which basically was raising concerns about its valuation, because as of now, they feel like, or the investors feel like, the valuation has plateaued and it can't go any further than that. And so from there onwards, the risk is very high that it is going to be coming down in terms of the stocks that people are putting into that platform, because of the, the duplication of similar streaming platforms that are also rendering that similar service. And so that is what the concern is right now. And so this coming at a time where this sort of video platform is also being rolled out by Google makes it even more concerning, because as of the time this was announced, it hadn't been, launched. But now it has been launched on the back of this. So we are looking forward to what, the critics of the industry are going to project going forward.
Tell you what, next week we're going to continue this conversation, because I think that it's really interesting. It really is. Wow.
Groundbreaking stuff, Daryl.
Ken Awojidako, our creative economist, joined us in studio for The Marketplace. We'll be back same time next week. Don't go anywhere. Enjoy your weekend.